Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our daily technical analysis update of commodities, work our way through the dollar, yields, precious metals, and then commodities ETFs that I follow. If you need help with anything, check out finding-value.com. We've got a 7 a.m. question and answer session tomorrow or Saturday if you would like to attend and you're a part of the community. Let's dive in here, see what's going on with the markets today, and I'll try to give you my opinions here on what I think is going on. So let's dive in. Let's take a look. We've got the dollar here just launching to the upside, which this is a massive bullish engulfing. I mean, it engulfs everything before it. Yesterday, we had a pretty strong selling pressure day. But again, yields are what are driving the dollar. And yields just absolutely moonshot today. I mean, big moves. And what's really interesting is the bedrock of the way that everything is being priced in the markets is based off of interest rates. And we have interest rates just rocketing higher today. Uh, and that's after yesterday basically falling off a cliff to the downside. So the bedrock of what everything is being priced off of is rapidly moving in both directions, which is going to cause havoc on asset prices. Now, to me, the DXY looks like it wants to go higher in the short term, but we've been basically moving back and forth quite dramatically. Is there more volatility in the system, or is this a legit signal where we're actually going to move to the upside? I think it's a legit signal. I mean, that's kind of my guess there. And that's what I would say is it's a legit signal. But again, we'll have to wait and see what next week has in store for us. The 2-year yield rocketing 3.8%, big move to the upside. We are still in this kind of channel where we've been just going back and forth with great volatility. And again, yields are the bedrock of how all of these assets are priced off of. And we've got all this volatility in yields. But we had a big day today, big day. The 10-year up 4.4%, monster move. Does this have to deal with Powell coming out and making those comments yesterday? Maybe. Or maybe they're just flooding the market and we just don't have enough buyers for bonds. But it's a big move today, guys. 4.4%, and the 30-year is up 3%. Big move today. Now, are we putting in a bottom and scribing out a bottom where we're going to go higher? Or is this a like a retest move where we actually end up going lower? That I don't know. I don't like seeing this big volatility in yields because when we start getting volatility like this, asset prices are going to fluctuate all over the place. It's going to be a lot of volatility. But short term, I mean, we very well could go lower in the short term, get down to this level here, and then make a base to turn off of, because this is still a flag pattern that could potentially, an inverted flag pattern that could potentially head lower. But if we get rocket juice here and just continue to rocket higher with that momentum that we generated today, we could be reversing this. And with Powell's comments of higher for longer and perhaps maybe not the rate cuts that people were thinking. So again, let's see what next week has in store for us for the yields. TYX TNX ratio, the yield curve inverted where the longer end went up more than the shorter end. This one is the 30-year and 10-year here. So we pulled on back, not really that great for gold. That's what I'm using this for. We've got bond prices down quite a bit today, 2.2%. We've got good support underneath us at about 93. We're at 96 right now. The US 2 and 10 is basically inverting further, which is also really weird. We've got incredible strength in yields going up, and the curve is inverting. It also inverted when yields fell yesterday. So this thing is inverting whether we fall or we go up in yields. So gold was down 0.84%. This does look bearish to me. We've got a squeeze up, a break to the downside, and then a retest here where we could potentially head lower. That would signal higher yields. But at the same time, if you go and you look at yields, you can look at this and it's like, is this just a retest where yields are going to fall? So what makes this confusing is a lot of the main driver is yields. And a lot of the charts don't necessarily agree with each other. So gold is not agreeing with what I just read here in the 10-year, which makes it very difficult. I like to stack data to create an investment case. To me, this looks like people are meddling with stuff. People are meddling probably with the gold price. They're probably meddling with yields. And something's going on in all of these. Which one's the correct signal? Don't know. We've got silver down, which is a bearish engulfing. We had a bearish engulfing in gold, which generally heads lower. We have a bearish engulfing in silver, which could potentially head lower. Yeah, okay. We've got platinum getting sold off some today, momentum's to the downside, and palladium. Palladium looks like it's trying to put in a bottom here, but it very well could head a little bit lower, as this could be maybe a potential flag pattern, maybe. But with the signals being kind of mixed up, difficult to say. If we get lower yields, I would suspect that gold goes higher. If we get higher yields, I would suspect that gold would stay under pressure because of real rates are going up. XAU to gold ratio sold off today, down 2.11%, still above this breakout line from the short term. Longer term, we still haven't broken that big long-term downtrend line. And that's very important to break. We've got the CRB index down because oil's down. And maybe that's coming back here for potential retest. We can also extend some of these lines up here, maybe that one and this one, and we could go somewhere in between. We've got the CRB to S&P 500, that's going lower. And it looks like we are picking up some momentum where this could even head lower even still. Are we in a blow-off top in the S&P 500 Nasdaq? We could be. And maybe the S&P 5 and maybe the CRB index wants to do one last move lower before we start to move on up, which very well could be the case. But I do find it kind of hard to believe that we have interest rates going up at 4% clips, 3.5%, 4% clips, and the S&P 500 and Nasdaq go higher. Very weird. GDX, so GDX is lower today. And again, this could be a flag pattern that we could potentially head lower in. Very possibility there. GDX, same thing. SILJ, same thing. They're all in the same case. SILJ looking a little bit better, but I doubt one's going to be an anomaly versus the other. Crude oil down 2.2%. We're back to this support level. So we're definitely back to the support level for crude oil. Surprisingly, crude oil came down today with yields going up. Generally, yields don't impact oil that much, and generally it goes up with yields. They're very highly correlated. But that correlation's broken, along with the correlation of gold, along with the correlation of the S&P 500, along with the correlation of Nasdaq, along with a lot of these different correlations. It's very difficult to read here. TTF gas looks like it's trying to put in a bottom and work its way on higher. That definitely looks good for a move up. Natural gas in America, it's trying to base out here. We're at a $2.09, guys. This is incredibly low. We're going to cut back on natural gas. At the same time that we are dramatically increasing our demand for natural gas. Our inventory levels are 5-year average. Very weird how we're sitting here at $2 on natural gas, almost as if we're at war and we want to lower the price of natural gas, lower inflation, lower oil price for inflation, and potentially hurt anyone who exports oil and the oil revenues of Russia and anyone else, as if that is something. XOP Yeah, you know me, down 1.1%, holding on compared to crude oil down 2 point something percent, 2.28. It's holding in there. But if oil gets hit and natural gas stays cheap, we very well could put in another shoulder here, much like this shoulder here. That very much could be a possible case. OIH down 2.12%. It's still above support, but it's got some selling pressure behind this and some momentum. So we'll see if that holds. Sprott Physical Uranium Trust is up, surprisingly, 2.2% today. A pretty big move, and it's a 52-week high closing. Looks really strong from the physical side. From the equity side, we're seeing a little bit of selling pressure today. We were down a little bit in URA, down a little bit in URNM and URNJ, but they're not reversal candlesticks. We do have this gap that we created yesterday. And URA, it's not a reversal candlestick. So yeah, I could drift down. It's possible, but it still looks all right. There's nothing here that's really concerning. Big long-term momentum is still to the upside. TAN, with those rates coming up as fast as they are, I would suspect a lot of these areas to really go lower. I've noticed copper, base metals, a lot of these renewable sectors going down when interest rates go up. So this relationship is still intact with rates rocketing higher today. COPX is down today, 2.6%. That relationship is still there. Lithium down, momentum's definitely to the downside, and that relationship to the yields is still there. Same with REMX, heading lower, and that relationship is still there. And again, some of these are very Chinese driven. This is a Chinese REMX, lithium, a lot of Chinese, I think, is in that too. And maybe there's something going on there between countries. Now, what's weird is the S&P 500 is up 1% and the Nasdaq's up 1.74%. Big moves to the upside for both of those. And they continue to rip higher, even in the face of what I consider to be really aggressive moves in yields. And that relationship is not, it's not standing up today. Usually rates going up is going to put pressure on S&P and Nasdaq. And here's another one. The regional banks were up today, 0.5% in the face of really stiff interest rate moves to the upside. Emerging markets slightly lower with the rates going up, as expected. And home builders are up 0.16%. It's holding on. Home builders must be strong as all get out, strong as bull, with rates going up as fast as they were on the 10-year. Over 4% today is what the increase was on a percentage basis. Moo down a little bit. That's holding true. It seems like when rates go up, this heads lower, and I do think that we could hit 69 where the support level is. Copper down a little bit. We're hitting our head on this resistance line, just coming on back. I'm surprised copper's down here, guys. I would think copper's ready to bust, but maybe we go sideways for a little bit longer in a lot of these different commodities like crude oil, copper, base metals, maybe precious metals. Maybe we still had a little bit more sideways. Iron ore up 0.9% today. Momentum still to the downside, though. This is just an inverted bloody nose. So we could see further downside with iron ore. Aluminum down 0.58%. We're still within the channel that we've got resistance on top, support on the bottom. And that support's probably not drawn completely correct because we've dipped multiple times under all of that. So we've got Baltic Dry Index down a little bit, 0.7%. We're right on support for Baltic Dry Index. We've got Newcastle Coal that is up today, 2.5%. This looks good to go higher for coal, as weird as that seems. But that looks like a pretty nice base, and I think we'll probably go up at any second here. Bitcoin down a little bit. It's still hanging in, though. It's still hanging on. We do have larger downside pressure than this upside move, so we very well could head lower. But again, this market, the relationships are moving all over the place. Ethereum also down. It's holding on, but again, I probably wouldn't be looking for a potential move lower is what I would be looking for. I don't see a huge bounce, and I see a pretty good selling pressure move there. But again, we'll see what happens. But overall, guys, that's what I've got for today. Thumb up for the content, subscribe to the channel, subscribe to the website if you guys like for that 7 a.m. question and answer session that we've got tomorrow. But yeah, yields just rocketing higher today. I mean, big move in yields. Surprising how some of the asset classes performed today. I'm surprised at the S&P 500. I'm surprised at the Nasdaq moving up as much as it did in the face of that. I know Meta came out with earnings, and I guess they really crushed it. But I mean, guys, these 7 stocks, they're massive. It's like these 7 are going to be bigger than the entire world. It's like, okay, yeah, sure. Um, but all of the feedstock for everything is getting hit. It's getting hit to the downside. Generally speaking, when yields go up, I usually see stronger crude oil. But there's something else driving this, guys. It's not crude oil, as we can see. I don't know if there's a debt crisis or something going down where yields are just rocketing up. If it's the market uh, reacting to Powell's comments yesterday and digesting it, I don't know. We'll see. But we'll continue to monitor it. We'll see what occurs over the next trading sessions, and I'll continue to give my financial opinions as we go. But that's what I've got for today. Hopefully everybody has a good Friday, and we'll catch you next time. This is Finding Value.